Hi, everyone. Welcome to the Climate FinTech panel here at For ClimateTech. Really excited for this conversation today, and a big thanks to the organizers for putting Climate FinTech forward as a topic, especially as it gains momentum and visibility. I'm fortunate enough today to be joined by two VCs and one startup, all of whom are working very diligently in the space. And before I have our panelists introduce themselves, I'll just chat a little bit about our own work at New Energy Nexus. We are a network of funds and accelerators that nurtures clean energy innovation around the world. We have about 10 countries currently in operation. And we run thematic accelerator programs. So for example, we have an electric vehicle battery challenge that we run with LG Chem, Hyundai, Kia Motors in South Korea. Just one example. Myself, I am the climate fintech lead at New Energy Nexus, working on digital financial technology that helps to catalyze decarbonization or advance decarbonization. And this work currently includes partnership with the Swiss Stock Exchange, collaboration with the Monetary Authority of Singapore, and work domestically here in the United States with Barclays, MasterCard, Duconomy, and Patch on our cards and payments challenge. So a lot going on and a lot to talk about today, especially as the financial system is going through a change, both from the top and from the bottom. From the top, asset owners decarbonizing their loan books and their investments, and from the bottom up, from consumers really starting to shift the way that they spend, they save, the way they invest and lend, all of whom are trying to take climate action in this intrinsic function of moving money. So enough about me, and really excited to dive in with the three of you today. And I think I'll pass it to Ruth first to start with an introduction.
Great, thank you so much. My name is Ruth Fox Blader. I am a partner at Anthemist. So just to give a little bit of context about Anthemist and why I'm here on the panels, we invest in startups that leverage technology to significantly impact the financial services industry and the financial system at large. Anthemist is founded on three guiding principles: authentic collaboration, virtuous cycle outcomes, and diversity and inclusivity. I run our risk management and insurance practice at Anthemist, and so the entire topic of climate change is something that I spend a lot of time on and a lot of energy on as an investor.
Great, and maybe we'll pass it to Allison next.
Great, thank you. Allison Myers. I am a co-founder and general partner at Buoyant Ventures. Buoyant Ventures is a new early stage venture fund. We focus on seed A and sometimes B. And we look at digital solutions for climate. So that means that it can be across energy, mobility, built environment, ag, water, a number of different areas. And then also climate risk intelligence is one that we find as a horizontal that runs across all of those sectors, and has specific interest in fintech and insurtech opportunities. We are female owned and run. And one of the values that we hold true are looking for diversity and impact, specifically climate impact in all of our investments. We look for those solutions that are addressing both mitigation of climate change as well as an adaptation to climate change. So addressing what we're currently facing today in terms of risk, which, as you can imagine, then puts us in a lot of situations where we're looking at fintech and insurtech companies. We also measure for diversity within the companies that we're looking at, and track operational metrics for climate impact. Thank you.
Awesome. And last but not least, Will.
Hey, thank you all. My name is Will Wiseman. I'm lucky enough to be one of the startups here supported by NYSERDA and Venture for ClimateTech. I'm CEO of Seeds. Seeds is a consumer fintech like Acorns for the environment with added impact, gamification, and incentivization. So for us, we really see climate fintech as a massive enabler for really driving investment into the climate space. And so for those of you who heard my pitch kind of to Brad Feld earlier, we found that, you know, if the same crowds from the 2019 climate strikes were to use Seeds, we can invest over $1 billion per year into clean energy projects using just the spare change from their everyday purchases. So with Seeds, every time you use your credit card, you're making profitable and sustainable investments into climate tech projects, making fighting climate change easier than ever before. I hold a double master's degree in renewable energy engineering from the Royal Institute of Technology in Stockholm, Sweden. I've spent my entire career in climate tech, including in large-scale project management, AI for renewable energy power forecasting, and even as an on-roof solar installer. So it's really it's a great opportunity to speak with you all, and I'm genuinely excited to be here.
Thanks so much, everyone. So we'll just dive in here on the first question, and the question is, what is climate fintech? It's such a buzzy word, and I know that there's a lot of definitions circulating out there. I'll offer the one that we've given from New Energy Nexus. It's digital financial technology catalyzing decarbonization. And I realize that's very broad. So I wanted to offer the question to you three to sort of define it yourselves in your own way.
Ruth, Allison, would you like to start?
Yeah, no, I think Allison, made a great comment in her intro. I mean, I think that there are sort of mitigation strategies and technology which will, climate tech more generally, which will really look to address directly issues like decarbonization and, issues related to mitigating, actual climate change and the risks of climate change. I think that when we think about climate fintech, we're thinking about how does the financial system facilitate that, those projects, and how do those kinds of projects become more sustainable, as well as how are companies and individuals mitigating the risks that they're already experiencing because of climate change. So, on the insurtech side, we think a lot about the insurance industry as being at the front line when it comes to bearing the cost of climate change. And so there are a lot of projects that are addressing the industry specifically and people and businesses that are affected by climate change more generally. And those projects can be really interesting. But, we'll look at the way that lending can work in order to allow people to adopt new technologies that are coming out of the climate tech movements. We'll think more broadly about sort of macro infrastructure and micro infrastructure and how, this infrastructure is being kind of systematically swapped out in order to make green adoption more viable. And, how are the costs being borne by companies, by consumers, and generally, how can the financial system really facilitate change away from, the technologies of the past, of the industrial age.
Yeah, I think that's incredibly well said, and we'll just add on. I mean, if you think about the infrastructure that we have, not just sort of from a physical standpoint, but like banking infrastructure, insurance infrastructure, that like systems that have been set up to make it easy to invest or make payments or transfer assets, all of that now needs to sort of be updated and have this climate layer put on it, because there's new risks that we're facing. There's new sort of, if you look at renewables, there's new assets that are coming online, and helping, streamline those. We're invested in a company called Raptor Maps that helps streamline sort of understanding all of the system of record for solar. That's something that actually ends up really helping banks and asset owners transfer ownership of large utility solar assets. So thinking about it that way really helps you sort of understand sort of like how expansive this ends up being, because it ends up being sort of like the the foundation in which we've built this entire economy on, and what we're going to have to sort of upgrade as we move into the future. We also see it as a really interesting way to price climate risk. And I mean, we all know the differences in opinion or fact or agreement around climate change and the impact it will have, but I think we're now really starting to see some of these impacts, and the idea of pricing climate risk through a number of different sort of approaches. I think that's where InsurTech and FinTech can really play a role, and it's part of the definition in terms of its role to play.
Yeah, and to add on a little bit of Aaron, what you said is kind of your definition from New Energy Nexus. I think that one is very closely aligned with mine. At that basic level, it's the intersection of the financial world, digitization, and then also climate. But then at a little bit more of a deeper level, I really see climate fintech as kind of the blending of the world's two largest commodities, really being energy and money. And the way I see it, climate fintech really has an opportunity to play a guiding hand in the markets to ensure that capital is being deployed thoughtfully and sustainably. You know, as the world and kind of the financial world sits at the moment, oftentimes we are not considering the externalities of the energy that we're creating, and climate fintech has a real opportunity to provide transparency and really better, deeper insights on the impact that capital is really creating in a knockdown effect, not only in the projects that it's financing, but then also in the communities that it's impacting.
Really well said, everyone, and agree. I also appreciate that now we have both investor and startup on the call today, and so I wanted to sort of give an opportunity to share perspectives from both sides of the coin a little bit. You know, as investors, Ruth and Allison, what are you looking for in the opportunity set of climate fintech? What excites you? And maybe we'll start with Allison.
Great. Yeah, I think we're seeing a lot of different opportunities across the space, but those that are solutions that are providing either unique data sets to help make decisions, or layer software on top of to provide insights, actionable insights, most importantly, on what companies can do to better mitigate or adapt to climate change, understand the risks that they face, disclose some of those risks to investors are really key. That data also is really important for simplifying decisions for companies that we see, and that's really exciting for us. Also understanding like where savings can be had across different areas. It may be that the solution and the innovation provided both provides savings as well as provides a new form of, or a better sort of environmental choice as well. We look for all the same things that we look for in all of our investments, but I think those are some of the interesting pieces around climate fintech.
Yeah, I'm happy to chime in. I guess Anthemist has had, has been sort of operating for more than a decade, and we have developed a thesis around what we call embedded finance, which really means, that the financial system is core infrastructure and is the backbone or the nervous system of society. And so we tend to look at, I would say adjacent spaces where a financial product or service can be really impactful. And I would say our approach to climate change is very, very broad, in the same way our approach to sort of fintech is very broad. We see a lot of opportunities for facilitating transactions or facilitating adoption via a financial product or service inside of another sector. And so to give an example, we've backed a company in the UK called HomeTree. On the face of it, it's a home services business. They provide a boiler installation service, and they and a boiler insurance product. And essentially, they're sort of the Trojan horse into decarbonizing the home. They provide all kinds of products and services, sort of white goods, other protection products for home utilities. And what they have is a very deep and sophisticated network of engineers that actually goes into people's houses and fixes things like fixing their boiler. Now, lots of times when they come to fix the boiler, they'll say, the engineer will tell the client, actually we can't fix this. You need to get a new one. We're going to recommend, an electric boiler. And what the client will say is, well, can I finance it with you? And so we have not only an insurance company, but potentially a lending company, which is on the face of it, providing home services in a way a very traditional company would provide home services. But in this instance, is really working on that micro infrastructure, which is going to be essential for making, long-term climate impact. And so lots and lots of examples from the portfolio, some of them more obvious than others, but we really do like to see those adjacencies with finance and where climate change is being addressed.
Super interesting perspective. And now, Will, as a startup, I'm curious, as a climate fintech startup, what are your challenges? What are your hopes? And what sort of encouraging signs are you seeing in the market?
Mm-hmm. Yeah, great question. So, the market has really heated up recently, and that's in comparison to ClimateTech 1.0, what used to be called clean tech. The major barrier really used to be investment capital. Investors got burned in 2008, 2009, and the industry became a bit of a black sheep. Capital dried up, and being a climate tech founder wasn't particularly attractive. Now, according to ClimateTech VC, just in the first half of 2021 alone, $16 billion have been poured into climate tech, and that's across 256 deals. That acceleration of investment into climate tech technologies is extremely promising. And now what I have yet to see is really very early stage capital, and that's really kind of in the pre-seed and seed space. And there's a lot of people prepared to help you along at Series A, but that first capital in the door isn't readily available yet. And for climate tech in particular, for hard tech or tech, hardware or deep tech, pardon me, they have SBIR grants or things through the government that can help you with non-dilutive funding to get you up and going. And with climate fintech, it's still not quite as prevalent yet, but there's really exciting moves, especially, with the work from Venture for ClimateTech, Aaron, the work that you all are doing with your climate fintech accelerator as well. So, I see the industry growing and looking to support this new nascent industry. And, it's our job to take as many shots on goal and see if we can really win this battle here.
Thanks, Will. Really appreciate that. And I guess I want to pose a question that's sort of a byproduct of one of our current initiatives, this cards and payments challenge that we're doing with Barclays and MasterCard. And there was a question that the two firms came up with together. And the question is, how do we change consumer behavior patterns and promote more climate positive choices using gamification, incentivization, pushes and nudges? So a really interesting question to think about. Also, for those of you who aren't aware of ant forest in China, this is exactly what they use, and they have over 400 million users that are now planting trees. So thinking about how gamification and incentivization might work in the States and elsewhere to further climate action by consumers. Will, I guess I'll start with you.
Yeah, Aaron, you grabbed, I would say, the first example I actually would have used is ant forest. They're a really interesting example of a company really driving that gamification and using, so the way they work actually is that if you, in your spending, make less carbon intensive purchases, for example, riding on public transportation, those emissions reductions are then credited into points which can be redeemed for planting real trees. And to your point, they have over 400 million people signed up on this. And in just 3 years, they've planted over 120 million trees. And I see that as really an exciting example of how gamification can help reframe climate action as something fun and really enabling us to make an impact at a much larger scale. We need to lean into our human tendencies of, wanting to make things fun and recognize that this whole energy transition should not just be framed all around sacrifice or, massive change.
Yeah, and I'll just add on to that. I think there's a lot that gamification and nudges and education can do in this space. I think it also, you really do need it to be easy. Ruth's example of like when someone goes to upgrade sort of a major appliance or something in their home, probably one of the least fun experiences that you're going to go through, but also one that you're only going to go through once every 10 years. And the idea of like being able to maybe get a better interest rate on whatever you pay for because it's more climate positive, or being able to finance it, period. I mean, those are things that really are some of those nudges, definitely less on the gamification side, but more nudges that help people sort of make the right decision. I would be one that would argue that, financing for solar was one of the things that helped it explode in terms of rooftop solar quite widely. And those sorts of little sort of changes, it is a reason why that we really find ourselves as being a bit more experts in the space when it comes to climate tech, because we understand a lot of the regulations and requirements around this. You can't ignore those, but it is important to, as you push for these things, to make sure that those aren't standing in the way, or that when they're brought down, we rush in to bring sort of speed and scale to the challenge that we have in front of us. I joke that, it wasn't called climate tech before, it was called clean tech before. And we can't call it clean tech 2.0 because everyone has so much PTSD from clean tech that we must move on to climate tech. And it's a much broader space, but thinking about like not having those regulatory constraints in front of us, that I think is really important and key as we move forward in this space. And then we can also help make it more fun because the rules are probably simpler in that case.
Totally agree. I'll pivot a little bit from the ground up consumer to the top down asset owner. And this question is for Ruth. How is the insurance industry so well positioned to leverage climate risk technology? And why is this so important?
Well, I think that the insurance industry is actually kind of at the front lines of impact from climate change from a financial perspective. And, we're all dependent on the insurance industry for protection products. The insurance industry was one of the first industries to really make very, very big moves on looking at, divesting assets that were related to carbon production. Really took a stand quite early in this journey and saying, you know what, this is a really big problem. We're seeing balance sheet impact, and we need to look, together for solutions. So there's sort of a little bit of a struggle, I would say, for the insurance industry. One, stemming the negative impacts of climate change is imperative for the industry to be able to survive. We're all in this together. That's sort of the kind of entire ethos of the insurance industry. But there will be, impact from the changes to the climate that we're seeing right now. We're in a no analog situation. It is dramatic already, and no industry will be able to foot the bill. So absolutely, big investment in stemming negative impacts of climate change. And number two, we need to think about how we can actually offer protection products in the changing climate. We are very interested in that. So in our portfolio, we think about things like how does data and analytics and the evolutions of data science really help us to better understand risk. We have a couple of companies, one, a reinsurance startup called Kettle, which has been looking at new models for wildfire risk in California. It's just not acceptable that certain parts of the country and the world will be uninsurable. We absolutely need to be able to address protection products to people. Another really interesting company in the portfolio is a company called Demix. It's dealing with non-catastrophic climate risk for businesses. And what we see is that businesses are being more and more impacted by, not hurricanes or natural catastrophes, but rather, the changing climate, the weird weather that we're experiencing, too much rain, too little rain, too cold, the polar vortex. These have really dramatic cost implications for businesses. And whether it's snow removal or impacts from lack of rain, we're seeing that we can create very novel products which are quite exotic, but that meet the needs of lots of customers. And so the industry, I think, needs to continue to use technology to more deeply understand risk and be able to offer interesting protection products. And then at the same time is very much invested in projects and technologies which will stem climate change impacts.
Yeah, and if I could add on to this one, Ruth, to your point, I think the insurance industry desperately really needs this kind of improved risk technology. And the world around us is changing, and if that isn't properly accounted for in their models, then the companies are going to continue to just rebuild in areas that are prone to fires or floods or hurricanes. And now one caveat to that is that insurance companies, they need to improve their modeling, not remove their coverage. And recently, an insurance company tried to revoke our coverage from the house here in California after it nearly burnt down in 2018. And that's like, hold up, no, you don't get to just be here when times are good and then leave when it no longer benefits you. We need to properly incorporate these risks and understand how then you can change the industry to understand that these are happening and are not, our personal problem in our home here.
Yeah, and I would like to highlight sort of like how this may flow if you think about it. As Ruth said, like insurance companies are really on the front lines because they take on the risk, they hedge the risk in case something happens to a home or a business. In the case of a wildfire or a flood. And then it's truly the asset owners, so the homeowners, the businesses themselves. And then you almost get to the banks who are making the decisions of whether or not to provide the loan in the first place. So it's a really interesting sort of value chain, or sort of like maybe domino effect. Let's hope we don't get that far, but like that you think about in terms of how long you're looking for, because insurance companies may raise the rates instead of taking away the insurance to astronomical levels that aren't acceptable. And then people maybe move out of those homes and then they default on their mortgages. And there is this sort of ecosystem that it impacts. It's interesting. And I think something that, to be solved for and innovated upon.
Well, Allison, this sort of ties into my next question for you. How are climate change adaptation and mitigation helped by digital finance?
Yeah, I mean, part of me wants to make the case for adaptation, because I think that for a while we've had to sort of talk about, the balance of do you adapt or do you mitigate? In the past, we've really talked a lot about how the most vulnerable communities, whether you're thinking about the Earth as a whole or in a specific city, those are the first impacted by climate change. And so it's really important to solve for not just parts of society, but all of society. But I think that we are now all feeling the impacts of climate change. So maybe that argument doesn't need to be made as much, though I would still make it, as I think the relative impacts are felt differently. But as I kind of alluded to earlier, like we see digital fintech and insurtech starting to provide solutions that help disclose risk, so transparency within this, pricing risk, and then identifying different options and pathways for individuals and businesses to take. And it's important that the data behind this is, that it's priced and sort of the options are really well understood. As an example, we're invested in a company called Storm Sensor, which provides data on how water moves through water pipes within cities. You would think that this is something that is well known, but industry standard is typically only depth of water, and it doesn't really help you understand sort of the digital twin of how water moves through. This sounds like it has nothing to do with fintech, but at the end of the day, if you have this data, this helps you upgrade infrastructure, water infrastructure in particular, that's being heavily impacted by climate change, and more efficiently spend infrastructure dollars, maybe even providing lower interest rates to those that are installing it. So cities, communities, and whatnot. And this is where we see a lot of sort of connections. Again, our entire economy is built off of our financial infrastructure. And I think that it's important to understand how it all ties back. But that's how we see a lot of adaptation and mitigation sort of being helped along through fintech.
Super interesting. And I guess what I would actually ask of the panelists here is, if you mention a startup name, maybe you could just throw the URL in the chat, and that way people can follow up and see. That one was stormsensor.io, is that right?
Yes, cool. That's right.
Another ask actually of the audience, I do think we're going to have time for Q&A at the end. And so you could start to throw questions in here. We won't come to them for a few minutes still, but as they come up, do please feel free to submit some questions, and we'll come to them shortly. So actually my next question back to Will, and coming from actually a crowdfunding background myself, this is one that's close to my heart, but how does crowdfunding help to finance clean energy projects, and how does it help to give access to demographics that wouldn't normally have it?
Mm-hmm. Yeah, this is really where my passion is sparked. This is the work that we're doing at Seeds, is really renewable energy crowdfunding, in particular, and clean tech crowdfunding. So historically, crowdfunding has really been associated with funding startup products. So only recently, with the rise of Republic and WeFunder, are we really seeing a reframing of the role that crowdfunding can have in the capital markets. And now, with the recent funding increase from roughly $1 million up to $5 million for regulated crowdfunding, I see a massive opportunity to disrupt the finance and the energy industries by introducing citizen participation through crowdfunding. And really, what this has the power to do is to create a movement. Crowdfunding can change the public from being neutral bystanders into active stakeholders by giving everybody a chance to share in the benefits of the energy transition. And really getting the public to buy in to the energy transition is going to be key for us to make the systematic change required to deal with our dire situation here. And now crowdfunding has that potential to make every citizen a climate conscious asset owner. And now what we will see is that crowdfunding is really a tool which provides the digital infrastructure for the public to have a channel to flex its collective financial power. And now here's my take on really one of the issues around how climate change has been framed to the public. Really, at the individual level, our options for reducing our personal carbon footprint are often framed around sacrifice, whether it's, reducing your meat consumption, flying less, or, changing out your car and buying a new EV. These are all really difficult. They require lifestyle change, or they're too expensive for many. And instead, if we reframe this, we step back, we reframe this crisis, and we recognize that we find ourselves in a once-in-a-generation opportunity for not only economic growth, but with a chance to right some systematic wrongs and bring the public into this transition with us.
Oh, sorry, I was muted. Thank you, Will. Really well said. And brings me to sort of my next question, just around minority communities and their sort of ability to participate in market booms. With climate fintech moving so quickly, how do we make sure that marginalized communities can get involved and participate?
Yeah, I think that there's kind of two interesting features of that question. One is that, as we know, minority and underprivileged communities generally are more negatively impacted by climate change than privileged communities. So there's sort of special care that we have to think about this topic in question with, in the future. I think that the other, there's a big problem generally in kind of venture capital funding, and there has historically been a problem around funding underrepresented groups. There is more consciousness of it now than there was previously. I think we can thank the Black Lives Matter movement for a lot of change in that directionally. And I think what's really interesting is as capital flows into into different kinds of founders, we're going to get different kinds of ideas, and we're going to get people who are addressing different markets, and we're going to get people who are addressing different communities. And so, we have strong commitment at Anthemist to be backing underrepresented founders and all great founders, because we really believe that excellence is evenly distributed. And we see that there are a lot of other people who are making those commitments as well. I think it's something that we need to be conscious of generally, and it's a much bigger kind of structural social issue. But I think that the consciousness has been substantially raised in the past, let's say, couple of years, and here's to hoping that it continues.
Yeah, and just building on what Ruth said, because I think that was well articulated. When we look at different solutions and what we're investing in, there are opportunities to even the playing field a little bit. As an example, we're looking at a parametric insurance company for flooding, and there has been accusations, and probably rightfully so, around Black and brown individuals who get lower insurance reimbursements because of assessors coming out, and it being sort of a cultural issue that we've had to face. The great thing about parametric insurance, which you can call trigger insurance, so how high was the flood, how low was the temperature, how high was the temperature, it triggers the payment, and it's preset, and there's no discussion around it. And that is something that really helps when you think about particularly insurance being used in a time of crisis, typically at least, being more immediate, as well as something that no one has to negotiate for, and there's no other discussions around. It also allows for individuals and businesses to customize what they need more appropriately. And these are things and ways that solutions that can be brought to the marketplace to make sure that we have a more even and fair society in the future, which is just really exciting. That being said, we are Buoyant stands with Anthemist, and we agree with everything that Ruth said. We are looking to get all the voices around the table, invest in underrepresented minorities, and make sure that we have sort of those that are experiencing some of these issues, solving them as well, which is kind of the point.
Yeah, to your point, we stand right there with you. We're privileged to be able to be in this conversation and have an opportunity to actually do something about this. And so personally at Seeds, it's really a pillar of my vision to really build an inclusive community for all. And, that's not only how we hire, but also how we price our products. So for us, we have a freemium model because we want to keep it free to sign up, to invest, and you can start investing with as little as 1 penny. And I think that can be a first step in broadening access to these opportunities and helping build that inclusive community, but it's not enough. And then for us, it's going to be about, what's the thoughtful deployment of the capital that we're crowdfunding. So for us, we really want to, deploy capital for one into community solar, because it has really trickle-down effects, especially by creating, it lowers local power costs, it reduces local pollution, which are oftentimes in those minorities or underserved communities. And then additionally, it can stimulate those local economies while creating local jobs. And that's really where I see Climate FinTech has a huge role in, supporting and broadening access to this opportunity that we're seeing.
Really well said, everyone. I appreciate those comments. And we are actually getting some good Q&A trickling in here. So I'm going to go actually back up to Bonnie. Bonnie, I saw you on our webinar yesterday, so thank you also. Great question from Bonnie, and she's asking, do you see greenwashing as an impediment to consumer adoption of climate fintech products? Who wants to take this one?
Yeah, Ruth, go for it. I saw you about to go.
Yeah, no, I'm happy to. I mean, I think greenwashing is bad, and it's an impediment to the conversation generally. And so, of course, it's an easy thing to point to when you want to criticize something. I think that what's really happened is that we've really turned a corner, and I think it's partly been contemporaneously with the pandemic. I don't know if it's causal or not, but people are very conscious of risk right now, and they're very aware of the fact that the climate is misbehaving. And so I think that it's difficult to deny that we are experiencing the impacts of climate change. And I think there's a kind of movement to go beyond greenwashing, which is great. And so in some ways, I think it's great to have an honest conversation about the actual legitimate impacts of solutions on the climate and on the people that it's meant to serve. But I don't really see, I see greenwashing as certainly an impediment to real change. I think everybody does. But I think that we're in a position where people have never been more conscious of risk than they are right now. And there does seem to be a will to change, which does feel new and different, in the past maybe decade.
Yeah, and I'll just, sorry, Will, go ahead.
Go, please.
I will just add on and say that I think that we are looking at a lot of digital technologies. That means that there's a lot of transparency within that and data that's collected that make greenwashing a little bit harder, as well as to Ruth's point around risk. I mean, headline risk is a major issue for a lot of organizations that may have in the past been sort of tempted to greenwash, and now it's like, well, we're either going to do this or we're not going to do it at all. Like there is a lot less of the in between because of some of those things. But well, please go ahead.
Mm-hmm. Yeah, to your point, I think that queued it up perfectly in terms of, we're really looking to implement new digital technologies that hold you accountable based on the real data and the metrics. It's easy to market one thing, and if your data doesn't match it, you're going to get called on. And especially, the recent Morgan Stanley's Sustainable Signals report show that, in particular, millennials and kind of younger generations are very skeptical of that greenwashing. Now, I see real areas for, added transparency and accountability in this by adding blockchain to many of, these kind of climate fintech products along the lines of carbon accounting, et cetera. It really creates an indisputable and traceable ledger of how that carbon accounting is going about, as well as that you're not double counting. And these will be really interesting and important areas for climate fintech to play a big role in helping, reassure the public that this is not just a big sham, but rather that we are actually going ahead and doing this, and that the impact that you are being told is really happening.
Yeah, and just to maybe circle back on this, this is not to say that any of this is easy. RMI recently did a article on digitally native GHG tracking, which really outlined a lot of the issues within this. And Aaron, I'll happy to provide that link. But I think that it's a complicated issue. But it's one that we're making gains in and solving. And that's where I think all of us sort of look at greenwashing and go, yeah, that is something that happened at one point, but we're hopefully moving past that. We'll probably get a new, more specific name for a more complicated and smaller version of greenwashing, but I'm happy with the direction that we're headed.
This is a little tangential to the greenwashing topic, but I was working with a friend yesterday looking at his retirement asset allocation. And he works for a company that sort of automatically allocated his 401k. He had never dove in to look at the underlying holdings. And the company themselves profess to have this sort of very ethical standing on the environment. And when we looked in the holdings, and I just shared this link, we started to plug in the funds that he was exposed to. He had a midlife crisis in front of my eyes because he had no idea that for 20 years, he had been invested in so many oil companies. And so if this is not an exercise that you all have gone through with your friends and family, please go to this Fossil Free Funds website, plug in the tickers where your 401ks are, and see how good or bad things are doing. And you might be unpleasantly surprised.
Yeah, Aaron, can I add one more piece to that? I found there was a statistic in your climate fintech report that was particularly fascinating, that I believe it was one less flight per year, cutting meat out of your diet, and one other climate reduction action. All of those combined changing your pension fund was 27 times more effective than all of those actions combined. And that really just goes to show that this is the role that climate fintech can have in really changing the fundamental system and where our money is going and who it's supporting.
Yeah.
Totally.
And Aaron, I'm really excited about this space. I think that there's, a lot of innovation to be had. And if you think about it, the pressure is going to start coming from the right place. What we were talking about greenwashing, you're really talking about what an individual business was doing that, may not have been completely transparent in what they were actually doing. But now what you're talking about is having pressure from investors to request sort of like ESG metrics across the board from all of these companies, and that pressure kind of coming down and then more accurately reporting out. This gets really complicated in terms of, the number of different levels you can have, because then you still have to go through all of those vendors. But again, this is where like the pressure is going to start coming from the right place. I've been talking to a lot of people about this particular topic of how do we get sort of transparency and visibility for investors so that they understand what's being invested in, because it's not just the individual investor that struggles with this. But again, exciting things to come in this space where I think we'll see a lot of innovation.
Absolutely. I do want to try and get to this last question from Shilpika. With the influx of much needed venture capital in early stage climate startups, we've addressed the first valley of death in climate financing, but have not come across a lot of solutions addressing the valleys of death related to scale and growth. So offering non-dilutive, cheap, rapid access to capital. Is this something you have a view on?
So I am just going to quickly jump in and say that like Buoyant really focuses on speed and scale to respond to the challenge that climate change poses. And I think that digital solutions are completely the right place to start when it comes to industrializing what already exists today as solutions. I brought up sort of ways to bring in some of that sort of revenue type capital for solar through Raptor Maps, but I do think that digital is the right place for this to start.
Mm-hmm.
Yeah, I would say just on the question, not every great business has been venture backed, and so there's certain models which are really not appropriate to a venture model. And for founders, I think, and for investors, being honest about that is really important. You can build a fantastic, very large business without taking a dime of venture capital. That said, the access to grants, access to loans, whether you're venture backed or not, having access to non-dilutive funding to scale your business is absolutely vital. And I guess whether your business is venture backed or not, you're going to have to build a real business where the unit economics make sense and the business is healthy in order to access this capital. But I do believe that the existence of this capital, both in the venture market and outside of the venture market and sort of other non-dilutive sources, is vital. Investment is going to be vital for us to accelerate change.
And to that point, we've been speaking with Tourage over at Pearl Street, a San Francisco-based company, and they're running kind of pipeline as a service for really connecting these companies that are in that scaling phase. They need working capital and cheap capital as well, and that's really where we're looking to complement the scene with renewable energy crowdfunding, clean tech crowdfunding, to be able to come in and say, look, if you're at that point where pouring some fuel on this is going to really allow you to scale and make a much larger impact, then let's bring the community in and allow them to share in the benefits, considering we're all on this planet together.
Chris, I know you're here to stop us, but I have one last request of everyone here. Please share a URL in the chat of a climate fintech that you're excited about. You don't need to pitch it, or you can, but just put in the URL so that the people here can see what's out there in this space. It can be in climate risk, it can be in insurance, it can be in consumer behavior, payments, wealth tech, crowdfunding, all kinds of stuff, just so people see the breadth of the space, and we can all follow up on these links later. Thank you guys. Thanks to the panel today. That was really great, and really appreciate the audience as well. I'll pass it back to you, Chris.
Awesome. Great work. This is such a, it was hard for me to actually keep track of time myself because I was getting caught in. If you want to join us back on the main stage, we'll be doing a partner spotlight with Evan Hines from Climate Base. So feel free to go over to the left panel there, and we'll meet you over there. Thanks, everybody. Also, great job again. Really great conversations.
Thank
Thanks,
you all.
guys.
Appreciate it.
Thanks.
Cheers.